Hey, what's going on, you guys? I want to welcome you back to my channel. Now, some of you have reached out and said, as of late, you just don't have a lot of time to trade in the markets. You don't have a lot of time to mark up and things like this. And so that could be due to a myriad of things. That could be due to job obligations, family, whatever the case may be. So in this video, I wanted to put together a swing trading strategy that can help those that just don't have a lot of time in the markets. Okay. With this particular strategy, I'm going to break it down in a way where it's extremely simple. And you utilize basic support and resistance, a little bit of market structure, put it all together, and you can create you a really good, easy to understand swing trading strategy. Hey, you guys, I hope you enjoyed this video. I see you on the inside. Let's get to it.
Strategize, then we capitalize on what we see. Wanna go to Pittville? Come join the Pip Academy and learn the Pip drill. Let's take the trip to Pittville.
All right, you guys, so let's start off by talking about our OHLC model. And basically what this stands for is open, high, low, close. And this is based on the anatomy of the candlestick. So if we're looking at these candles and you can see that they both have wicks, a bearish candle typically will open at a high point, okay? It'll open higher than a bullish candle. And typically what it does is it'll retrace up, it'll go to its lowest point, and then it'll close a little bit higher, okay? And if you look at this direction in which this candle is going, it's a bearish, it pretty much gives an example of a bearish market structure, okay? We have a high, lower low, and then possibly creating another lower high, okay? Now, when we're looking at a bullish candle, bullish candles typically open a little bit lower, okay? And so a bullish candle will typically open in this fashion here. What it'll do is it'll retrace a little bit lower, it'll go high, and it'll typically close in a fashion like this. And if you look at this particular model, this is a example of bullish market structure. You have a low, you have a higher high, and possibly creating a higher low, okay? So when you look at these, the opens and the closes are opposite when you're looking at your bearish and your bullish candles, okay? All right, you guys, so let's shift a bit and let's look at this OHLC model and how we can capitalize on this to gain buy and sell opportunities, okay? So typically, buy opportunities will come at your open and your low points of a candlestick, okay? And this is based on a weekly candle or a daily candle, okay? Your sell opportunities will happen at your high and your close points. Okay, and then I'm gonna also show you guys some additional opportunities that we can take as well. But let's just say if we have a candlestick that has, large wicks, such as the model that we showed you previously, okay? If we're looking at buy opportunities from our open and low zones, once a bearish candle open, if we get price action on a 4-hour or a 1-hour that closes above this zone, we can typically look for buys, okay? And at our low zones as well, if we get price to pretty much close above this area here, we can start to look at those other time frames, 1 hour, 4 hour, and typically look for buys. We can drop to the lower time frames to get, better entries and better risk to rewards. But that's what we typically want to base this particular strategy on. Okay, the same holds true with our buy candle. Okay, our bullish candle is slightly a different anatomy from the bearish candle. Most of our open and low zones are at the bottom. So if we open in this area here, we get a closure, we want to look for buy opportunities. The same holds true with our low zones as well. Okay, so now when we're looking for sell opportunities, this will come at our high and close points. Okay, so if we're looking at a high of each of our candles, when price starts to retrace in this area here, give us a closure, we can start to look for sales. Okay, and the same holds true for our close zones. In a bullish candle here, when we start to get closures here, we can look for sales. When we get closures in this area, we can look for sales. Okay, now let's say that we see a bearish candle. However, the wick is extremely small, because remember, every candle looks different. Or let's just say the candle is just not there at all. One of the things that we want to do is pretty much eliminate this area here, okay? We want to eliminate that, all right? And we want to kind of look at it from a perspective of, you know, let's gather the data and let's see exactly what the candlestick will actually do. So in this area, we don't necessarily want to look for any sell opportunities, okay, until we actually get to a point where price pretty much presents itself. Which brings me to my next point. On a sell candle only, we have additional opportunities, okay? So on a sell candle, we have an additional sell zone and we have an additional buy zone, okay? So let's just say we saw a candle like this and price gave us a closure down in this area. We can look for we can look for sell opportunities to take it down within this area here. Now you might ask yourself, why don't you have these same opportunities on a bullish candle? Because if you look at it, this area on a bullish candle is a closed zone, and we're already looking for sales when price closes and starts to go down in this area. Same holds true in this area. We're already looking for buys. So this is not an additional zone to actually look for the same opportunities, because these same opportunities already present itself, okay? So we just want to be mindful of that the anatomy of these candles can change, okay? And when it does, we have to use our judgment. We have to use market structure on smaller time frames to see exactly what price action is giving us. Because, you know, on a candle like this, you know, we can, you know, this weekly or daily candle, it can open up and it can almost be a Maribosa with no wick at all. Okay. And if we don't have anything like that, we want to move our zone up slightly and we want to say, all right, let's see exactly what price action is going to give us. And we can take opportunities as they present themselves. Okay. I hope that makes sense, you guys. All right, you guys. So we're currently on gold and we're on a weekly time frame. Okay. And so this particular strategy can be utilized on a daily if you're intraday trading, or on the weekly if you're swing trading. All right. So first thing we're going to do is set up our zones for our OHLC model, okay? This will be our low. Okay, this here would be my open. We have a close in this area here. And we have a high. Okay. Now some of you guys might say, well, how do you determine how big your zones are? And so I kind of spitball according to how big or how long the wicks are. Okay. And so one of the things you want to understand is you typically want to mark up your charts when the market is closed. So typically on the weekend, on a Saturday or a Sunday, that way you can kind of gain insight as to how the market closed, as opposed to when the market is actually open for the following week. Okay. So now from here, we want to go to the 4 hour and kind of analyze how the market actually closed from the previous week. Okay. So one of the things that we noticed is price closed with a huge bearish push to the downside and some sort of a retest. But one of the things that we can see is that we broke some short-term highs along the way, which signals that there was a transition on a smaller time frame, which gave us a break of structure. Okay. So from here, let's drop to the 1 hour time frame. On the 1 hour time frame, we can see we have market structure as such: higher high, higher low. This is a liquidity grab. So from here, we have a higher high, which impulsed to a low at some point here, and then we impulsed here, which gave us that change of character in this area here. Okay. Now, this here, because this is just a one candle pullback, it looks a little weird, and so we're going to signify this area here to be pretty much our change of character. Okay. All right. So now one of the things that we want to know, let's just go back to the 4 hour. is that we also have this huge supply zone here, okay, that has not yet been mitigated. All right, so we want to be patient, because as the market is closed, when it opens, this is going to be Sunday. On Sundays is typically when the weekly candle produces its wicks. It kind of establishes highs, it establishes lows, depending on the direction of that the market is going. But we can see we closed with a transition, so we possibly might open up creating a weekly wick. Okay, so we want to be patient, and we want to allow the market to pretty much play out, at least for a day or so. Okay, so now if we play this, if we play price, we can see we got another bearish push to the downside. Okay, and so right now market has opened, we're well into Sunday. Okay, from here we can see that we had a transition or retest that tapped into this 4-hour supply. Okay, so that's the retest that we wanted, that we were looking for. So in lieu of this, you could have possibly set an alert in this particular area right here. All right, so now what we want to do, we want to drop to our 1-hour time frame, and we want to wait for a body closure under this particular zone. Okay, remember that on the hourly, we want to wait for a body closure. We get our body closure, and we can go ahead and set. We get our body closure, so from here we want to go ahead and set our short tool. Go ahead and take our entry, stop loss over this price action here, and we want to ride price all the way down to the next zone. Okay, all right, let's play price action and see what we get. And there we go. All right, trade 1, a success. All right, so now we're well within this particular week and things like that. Now we're pretty much on, we're well into Monday. All right, and we can see that price gave a rejection to our zone, our low zone down here, and then gave us a huge bullish Maribosa that closed above this particular zone here. All right, so now we have a lot of price action up here. We have point of interests, we have imbalances, things like that. We want to be mindful. And so what we want to see is a retest into this zone before we even attempt to take the market back up. Okay, so now this retest can consist of our hourly candle kind of trading into the zone. It can consist of a 15-minute structure trading into the zone. You know, you can determine or decide whichever smaller time frame that you can utilize for that particular retest. Now, because we're swing trading, you want to make sure you utilize alerts. That way you're not necessarily sitting on the charts all day and things like that, because this strategy is geared towards those that don't have a lot of chart time. Okay, so now let's go ahead and analyze this, and let's wait for a retest. Okay, so we can see there's a slight retest right in that area there, but let's just say we didn't catch that. Okay, let's see if we can get a deeper retest into possibly this Maribosa here. Okay, price is going up. We can see we've taken out this imbalance here, and let's see if it'll take out this next imbalance in this area here. Okay, we pretty much almost got into that area. All right, we can see price starting to let's see, we can, one of the things we can see is that we got a transition on a smaller time frame right here. Price came up, gave an impulse down, and gave us a transition. So this is possibly a retest on a smaller time frame. Okay, and as you can see, price decided to tank into this particular area. All right, so now we're starting to get that retest that we were looking for. Okay, and this is the hourly time frame. Okay, so we can see here we got a bearish, bullish, bearish. So price is not yet ready to give us that that push to the upside. Okay, we can see we've dropped a little bit deeper. Okay, now we're starting to get a transition here. Okay, we got a morning star in this area here. Let's see what we got. Got another retest in that area there. Let's drop to the 15-minute time frame just to see what market structure looks like. And so we can see right now that price is still giving us bearish momentum. And one of the things that we can do, you guys, is set alerts on both sides of this market structure on the 15-minute. So this here can be a COS, which stands for continuation in structure. That way we are not on the charts stalking this. We can just let the market play out and give us what we want to see, okay? So let's go back to the hourly. We can see that price has wicked this particular area here, setting off our alert. If we go to the 15-minute, we can see this pretty much was a liquidity grab. It was not a body closure. So there we go. We got our body closure. So we come here, we move our 15-minute change of character area, okay? And one of the things that we can do as well, we see price almost close this area here. Now, a couple things that we can do, depending on your risk tolerance, your risk management, however you decide to choose, okay? You can take a trade here, depending on your risk management, put it up under this zone here, or possibly up under this price action here, ride price all the way up, or you can wait for the transition, okay? A lot of times for me, I like to wait for transitions to confirm that the move is about to be made, okay? So let's check that out. Okay, so we got a transition here, all right? So now on the 15-minute, one of the things that you can see once your alert has went off, we see that we have a point of interest in this area right here, okay? We have an imbalance, that impulse that gave us that change of character, okay? So one of the things I would do is come here, set a buy entry right above this wick here, stop loss below this price action. And from there, I can ride the price all the way up to this zone here, okay? Now let's go over to the 1 hour and let's let this play out and see how it does, okay? Okay, price wicked us in, and let's see how price play out. All right, we started to get the push up. At this point, when it broke this area here, we can move our stops to break even. As price is approaching, there we go. We in and we out. All right, so this is how you can utilize your strategies. You can utilize swing trading. You can utilize your alerts, all encapsulated into one strategy, and not stay on the charts for minutes and hours at a time, especially when you have things to do, you have obligations. This strategy, you guys, can help you guys still be profitable. Hey, you guys, I hope you enjoyed this video, and I'd like to thank you for watching.
Strategize, then we capitalize on what we see. Wanna go to Pittville? Come join the Pip Academy and learn the Pip drill. Let's take the trip to Pittville.